Hello folks, I'm L.A. Little, and this is your weekly TA wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves what happened last week. What does it tell us about the coming one? I do the show once a week every Sunday night, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Also do a show 4 times a week, Monday through Thursday. It's the daily wrap. You can catch that. You can catch both of these shows. Yeah, I was popping it up here for you on YouTube. So if you want to watch the shows on your own time, anytime, pop into YouTube. There's a thing in here that tells you how to sign up on the channel if you're interested. Even if you don't want to do it that way, it's easy to pop in here and grab it from these shows. So it's another way for you to watch anytime, anywhere. It's a convenient method. What happened to the markets last week? Well, as we know, on Thursday they started to bounce. Friday we had the if you go back and look at what happened on a daily chart, you actually had the interesting situation where Friday morning we hear that Ballmer is going to retire, and that leads to a huge move in Microsoft stock, and it was a sell the news. Anytime a stock like Microsoft pops up, it was up about 8%. That's probably a sell the news. This thing is going back into, and it almost got there. The low here was 35.22. It got up to 35.20. Volume 248. You went back up with 223, and that was on this huge news. That's just closing the gap, folks. This thing's coming right back at you. So if Microsoft wants to run back up into the resistance on Monday, I suspect you get another shot to sell this thing. If you haven't sold this yet and you want to sell it, that would certainly be the spot. I don't know that you want to hold on to Microsoft on the hopes that somehow Ballmer's leaving is going to change things, because I don't think that's going to change anything. Here's your weekly chart on it. You can see going back up into resistance. Volume's not going to be there. If you're looking for an out, this is the out on Microsoft. Now, what that did, of course, was to push all the indexes higher. Let's start with the S&P. And let's pop through these and look at what they look like. And then I'm going to actually do a special slide presentation to show you what I believe is about to happen. So S&Ps started to get the turn on Thursday, got the turn on Friday in a push up, right? Microsoft was pushing. Volume lighter as we're going back up. We're back up to this high. That high was 1659 roughly. We closed at 1663, so we're just barely over the swing point high. There was another one back here. That's where this breakout bar measures on the prior swing point. That high, 1680 on the breakout bar. Take it back, 1676 on the breakout bar. That's the area that this is trying to get back into. The breakdown area was Thursday, a little over a week ago. High there, 1679. The gap is back up to 1684. That is going to be tough sledding if the S&Ps can get back that high. If I switch over and look at the weekly, you actually got a hammer reversal, which says that this thing can travel back up. You can see the resistance zone is up there. I would be surprised if it doesn't try to move back up, especially at the beginning of this week. The end of this week, we start getting a lot of economic news, especially overseas. You've got PMI flash numbers coming out at the first of the month. We're going to have the employment numbers. You still got the Fed on tap in September, about 3.5 weeks away. You're going to see some anxiety, I expect, to take place as a result of what's coming up. Now I want to flip to, now that I've shown you the S&P and talked about it a little bit, before I go through the others, I actually want to flip over to a slideshow, and I want to look at prior scenarios like this And in particular, I'm going to go back to the last time we actually had a decline in these markets. And what I'm looking at here, pull this in for you, what I'm looking at here is a chart, marked up chart from last, it was roughly September. It went up and made the highs and came down in November. Remember, we bottomed out end of November and then took off, and we haven't looked back since. So this was that prior period, the last time we had a retrace that was of significance. That was about 120 points off the top to the bottom. 120 points in this case would have got you about 8%. 8% down, that was a decent retrace. Now, when these set up, and the question has been asked, is can you know that a normal, what looks to be a normal retrace will be a normal one versus, you know, a disaster like we saw in 2000 and 2007 and 8 and back in 1987, which is some pieces that I've written recently, of which if you're interested you can go over to the site and read. In this particular case, I want to point out some things. First, you started building up anchored resistance. You can see volume expands here as you go to the top. Volume expands again on this bar. That sets up a resistance zone. That first higher resistance zone is off of this bar, that wide price spread move. This was a very fast move. You can see it here. Volume expands. Usually that leads to some sort of a range trade, and this actually was a long move up prior to this. And so you got sort of a blow off top, if you will, range trade that sets up. When you come back up to test it, and you come back up to test it again, and you're doing this sideways number, you're building swing points. That's why we watch swing points. When we're building these swing points, if and when they break, they can lead to a faster move. And if I fast forward to what we just did the same sort of thing here. Now, it wasn't the same in that we didn't have the blow off, and you can see the scenario looks different, but still, we went sideways, we created swing points. When you create the swing points when they break, and in this case they broke here, yet it went right back up, tested one more time, and then they finally broke, and then you got the real turn. Many times the market gives you one escape, and in this case you got the break, fast move back up to resistance. You could see it was failing again, and that, of course, once this thing started back, you had to know to get out. Now, if I go back to the period that we have now, what are we doing now? Our swing points are here. We got the fast break down as a result of the break of those two swing points. Now we come down, we're coming back up. What are we coming into? Well, we're coming into a bearish retest and regenerate. So now we don't have, there is actually some resistance up above, but the big play here is to look at how this thing tries to retest and regenerate lower. That's what it's going to try to do as it comes back into these swing point lows, where those are now the test on the way back up. If I flip back over to last year, in this particular case, you came back up and did the same sort of retest, regenerate against these prior swing point lows and against this break that became swing point lows. Well, actually this one didn't, but the break was here. If you draw this back over, that is your retest and regenerate against this swing point low and then against this one. And as you come back up into it and it can't get over it, it regenerates lower, and that's when you get the bigger move that pushes you down. Now, what's to stop this from being a 2000 type crash? Well, folks, there's really nothing different. I mean, this can turn into it. You never know if they're going to or not. It's only in hindsight that you figure that out. When you get the setup where the risk increases, that's when you have to change your portfolio risk. You have to look at it and say, oh, there is the potential for something larger here. Now, on this particular chart, you actually have a swing point low here as well. And now, if we move to a weekly chart of that same time period, you can see you had a swing point low here around 1390. Going back to the daily, same time period, that's right here. When this one breaks, that also is the weekly. When the weekly and the daily break, you get the fast move. And those fast moves can turn into larger declines. Now, let's go back to what we're doing now. We've got a swing point low. It's way down here. It's around 1600. We're up at 1650, 1643. We're coming back up to do the retest, regenerate. If we fell and regenerate lower, assuming ABCD forms, that'll take you down towards that swing point low. Probably not going to break it on the first move, just given how far away it is. If I go to the weekly, you can see how far the weeklies are. They're even farther away. So the idea that you're going to get a break on multiple time frames in the current structure just isn't there. Right? It's not there at this particular point in time. Can it develop? Yes. And matter of fact, you've got two of them that are fairly close. Let's say that this thing does come down to the 1600 area, gets a bounce, and then comes back, and maybe it mills around up there for 5 or 6 bars, and you end up creating another swing point higher. Now you've got 3. You can see how things can develop to be potentially bad, but they're not there now. What we have now is we have a run-of-the-mill pullback taking place that could turn into something a little bit larger, but right now it doesn't look like it's going to turn into anything major. If that's going to happen, the structure is going to take a while to build out, and then you're going to see that structure once it's in place, once the potential's in place. That's when one has to get worried about it. Right now, it's run-of-the-mill, and until it turns into something more, that's the scenario that you're facing. All right, I wanted to take a few minutes to go over that because I've had a lot of questions about it. Matter of fact, I had 2 more emails about it this weekend, and I just wanted to go through it one time to try to show you that there's a different structure, and you have to understand what that structure looks like, and until the potential is in place for something to actually happen, it just doesn't mean much, right? Yeah, you can always get pullbacks, but huge pullbacks, they happen when the structure has built out, and so far we haven't done that. Let's go back to the S&Ps, or actually to the current chart. So the S&Ps we kind of went over. I'm going to skip the Dow. The Dow's not telling us anything. I'm going to go into the NASDAQ. Now the NASDAQ got a big push up on Microsoft on Friday, and as the NASDAQ's coming back up, it's trying to fill the gap. The bottom of the gap on the daily is 36.68. We're trading at 36.57. Given that you're into the gap, I would think you could try to close the gap. And if you look at it on a weekly, this thing's done nothing so far. I mean, it's still hanging at the highs. We haven't even had a retest, regenerate off the weekly yet. And if we were going to get that, that would be back in this price point, down in this range. And so that hasn't happened. We've came into support once, we bounced off of it, still haven't even got into the gap area where the breakaway bar was. Right? So this is very strong. Going back up to test. What you want to see is you want to see how the test unfolds. Volume was decent on the way up. What will it do when it gets up to resistance in these prior swing point highs? Note, there are 2 swing point highs at the highs. If they break simultaneously, you can get a faster move off of that. There's going to be stops sitting on the other side of this, and you're going to have new money having to chase the market if in fact it breaks higher. If I go back to the S&P, you can see here that scenario is not the same. You got a long way to go to get back up there. Now, if you get back up there, you do have multiple swing points at these higher highs. Let's go look at the NDX, which is where we really had the juice off of the Microsoft news. The gap area, the bottom of it was 31.25. We got as high as 31.27. We closed at 24. So in this particular case, volume was 14.89. You did 14.99. So you went into the bar, you closed underneath it, so you failed on price, but you actually had the volume. So I suspect it's going to come right back in there and test it again. Now on the NDX, you only have 1 swing point high up here. It's not multiples. I would think the NDX is going to try to test the highs. That's the way it's set up currently. And if we look at the Russell, and I'll use the IWM so we can look at the weeklies, so we can see the volumes. The Russell's coming back up. It's into the gap area on the IWM, and actually that looks pretty different than the actual Russell. So I'm going to push over to the Russell itself. The Russell itself is trying to come back up into that gap area, so it's not there yet. 1039.10. We're trading at 1038.85. It's going to hit that and try to get into the gap. This is the index to watch. Can it get into the gap? If this one gets into the gap and starts to push towards the other side, you're going to see the NDX push to the top and test the tops. You're going to see the composite get up there and test that swing point high. And in this particular case, if the Russell does this, and if the stronger indexes, namely the NDX and NASDAQ, do what they would do as a result of this, then you're going to see the SPX push right back up into that gap area. Okay, so that's the general indexes. Now, the general indexes generally, not to overuse the term, look stronger than the sectors. Because if I pop into the sectors and take a look at what they're doing, and I'll just start at the top and work my way down real quick here. IYT, it's coming back up, coming into resistance, has no volume. These are trying to set up ABCDs down. You've got ABCDs on weeklies on the upside, but now you're starting to have the formation of bearish ABCDs down. And the IYT has it. If I look at the SOX is doing it as well. Matter of fact, as I go across the board here, you're going to see all of these doing the same sort of thing. They're all building up the potential for ABCDs down. Some of them are large, some of them are small. That's the XLB. The XLB's been stronger recently with the basic materials, the metals and so forth. But if I keep flipping through these, you can see the potential for ABCDs down. A point, B point, now you got a C down. Most of those are going to take them towards the swing point lows and the support zones that are below. And each of them look the same. The only ones that look any different are the weakest ones, which are the staples, the consumer staples, which is getting a very weak bounce, and the utilities, which can't even hardly bounce. So we're getting, these weaker sectors that are already bearish and even sideways trend on the intermediate term time frame. So we have two intermediate term time frames that are sideways. And remember, once these start to change, you get a couple, 2 or 3, then pretty soon they all start to change. Right now, you have a sideways trend. If in fact this market heads down again, these are going to turn bearish on the intermediate term time frame, and you're going to see on these, I'm going to pull up the SOX here, you're going to see on the intermediate term time frame on these other sectors changes in trend as well, if that's what happens. Here's a swing point low on the weekly. And you can see how these are not that far away. So, I mean, if you do the numbers, that's roughly 61. We're trading at 63. We're talking about 2 points. 2 points on this index is nothing. I mean, you can get down there fairly quick. And if I go back over here, you can see that that's this low. And what would that be? That would be multiple swing points on multiple time frames, which would allow these to push deeper and cause the indexes to come back. So to try to summarize, indexes don't look that bad, but your sectors have the potential to turn bad, and one has to recognize that's the case. And if we think about the fact that we've got a lot of uncertainty, as a matter of fact, next week, I guess it is next week, you're going to have, it's going to be Labor Day, it's going to be a shortened week, and then you're going to have the Congress go back into session, and I'm sure the first things we're going to start hearing out of them is budget battles, budget issues, right? Because it's that time of year, we have to go to it again. And not only that, you have the debt limit that's going to be hit again. And so again, September, a lot of things coming up over the next about 10 days and 10 sessions, and I believe this market is going to struggle as a result of it. Let me look. I didn't get a chance really to look much at the OX markets. Let's see if there's anything interesting there. I've got a question that was emailed to me. I'll take that, And if you have any, I'll try to hit yours before I'm done. So let's go to the ox markets. Let's see. So bonds started pushing up last week. Let's see what they look like on the daily and weekly. So not a bad push. And look at the volume expanding as it came back up. Now that's the first time we've seen volume expand in a very long time. Here's 3 months of data and you haven't seen expansion of volume off the bottom. First time we've seen it. That may be a big tell. That may keep interest rates down. And we'll go back up here and test these. Yeah, come back. Well, that's a long way back up. We're not going to get that far, but the two big bars here is in this price range. So that's about 108 to 107 and 3/4, and we're trading at 105. That's a long way up, folks. That's all the way back to these swing point highs. And so the first test, of course, is going to be the low, but you're coming back into it and you got volume. This looks like bonds are going to try to move higher, which would be beneficial for the market. Let's go to gold. Gold was trying to sell off, and then they flipped around and they took it straight back up. I shouldn't say trying to sell off. They were going sideways, consolidating. So gold has turned bullish on the short-term time frame. On the intermediate-term time frame, it's still bearish, and it's still got a ways to go to even try to change that. And I suspect that it's not going to get there. So now the target 136.75, and that is just a bit above this. So gold looks like it can move higher. Let's see if silver looks the same. These have had a run, an extraordinary run already. I mean, if you just do the numbers, 10 to 23. I mean, 18 to 23. It's $5. That's 30% almost, 25%. That's not a small move. And we had volume come in, and now we got the extension. So silver doing the same thing. The one I really wanted to look at was the dollar. Let's look at the dollar real quick, and then I'm going to shoot to these questions. So dollar. Okay, so dollar went over the highs. Okay, that's a hard read. Let's see what it looks like on the weekly. Well, that's a test of that low, and it tested this low and didn't have the volume. Dollar looks like it's going to try to work higher. Let's check out the euro and see if that's consistent. And the euro fell at the highs and didn't have the volume. So that is consistent. Looks to fail. So the dollar should try to work higher. So bonds want to try to work higher, which would bring interest rates down. Dollar wants to work higher, which is actually typically equity non-friendly, but this year it hasn't mattered. I shouldn't say typically. Of late, it's been that way, although this year it hasn't mattered. Indexes look like they want to push higher to start the week. Sectors, much more questionable. And so a push higher at the beginning of the week, I would think that Monday, Tuesday, you should have good action or attempts to push higher. If the market can't do that, then it's telling us something. The setup here is for a farther push, and then Wednesday, Thursday, Friday, as we start getting into all the numbers, we may see some back off as a result of that. Let's look at this question that was emailed to me. So the question had to do with the housing market, and basically there was an article that this gentleman read, had to do with the housing numbers that came out. They were down 13.4% year over year on, I think it was year over year. I'm not sure what the numbers were, but it's 13.4% lower, basically the lowest level in 9 months. And the question was, or at least the comment was in the article, is like, oh, well, if the housing isn't doing as well, the Fed's not going to taper, and if the Fed's not going to taper, that's actually going to be good for the markets. You know, at this time, folks, people are pricing in tapering, and they're probably pricing in 10 to 20%. And so, you know, taper says you're not going to quit pushing money into the system, you're just not going to push quite as much. So if you push in 75 billion instead of 85 a month, or you push in 65 instead of 85, is it going to change things that much? The Fed's assumption is that it isn't. And if you read what came out of Jackson Hole this weekend, Most of that looks like the Fed is intent on doing that, and so the market has to face up to that. Now, if it ends up being just 10 come the end of September, when they do it at the next meeting, the third week of September, the market may even rally, especially if it retraces prior to that. And so a lot of what happens in terms of how the market reacts to what the Fed does in terms of tapering is going to be predicated on how we move into it. And I suspect it's going to have difficulty and at least go sideways and consolidate for a while here. So I don't know that really changes anything. So you get one number out of the housing market. I don't think that changes anything. I think if anything changes anything, it's the employment numbers that come out next Friday. That would be the one that could actually change something. So if we watch those employment numbers on not this Friday but next, if those employment numbers end up very weak, then you might take tapering off the board and we may get a rally off of it. If they come out very strong, the market probably is going to drop. Fears that the taper is going to be significant. Middle of the road, it's the same thing we've seen for a while. So that's where that stands. Let me see if you have any questions. Okay, no questions on the chat board. All right. Okay, so where do we stand in general? Looks to me like this market's going to try to go a little bit higher to start with, and then I think we're going to get some tests that tell us what it wants to do the rest of the week and probably next week as well. And so that setup is coming. We're going to have to see how this bounce plays out, how far it can carry, and how it carries. Do we get volume expansion? Do we get another one of those V-shaped moves? My inclination is to say no. Not from what I see, especially when I look at the sectors. Those sectors can change though, and if they do, and if they get back into resistance and blow right past them, well, all bets are off. We're going higher. But I doubt that's going to happen, so I don't know that you should back up your pickup now and pick up a lot of stocks. I'm going to leave it at that. I thank you for being there. Have a great night, and I'll catch you next time. Good night, folks.